Hello, this is Alex Kazmark for the FXEdge.com, and this is the daily FX profit signals for October 2nd, 2009. One reminder before I begin, the purpose of this daily FX profit signals video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is conduct some technical and fundamental analysis and help put together some potential trade opportunities using our two trading strategies. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Hey everybody, happy Friday. All eyes are on the release of the non-farm payrolls as another month of trading begins. Traders need more guidance in terms of economic numbers that supports either a recovery or a potential double-dip recession. We expect jobs to continue to deteriorate as most businesses have either clamped down on new hires or continue adjusting for lower demand. Some statistics over the summer showed a big improvement from last year. However, we have to adjust for the stimulus package as there has been zero organic growth. This jobs number is likely to shape the trading activity for the month of October. With that being said, we'll have another update on Monday to follow up on the release and see which way the trend may continue in the dollar's favor, or perhaps we'll see another rebound, another reversal, and more dollar losses. Let's take a look at the majors. First up is the euro dollar, currently trading at 145.40. A dollar improved quite a bit here, over a penny and a half from yesterday's high. First area of resistance for the euro can now be found at 145.60. Above that, we'll see 145.20. Above 145.20, we'll run into resistance at 146.50 and 146.80. Above that, we'll have 147.40. First level of support could be found at 145.20. That was yesterday's low, followed by 145 and 144.72. Below 144.72, we'll find resistance at 143.70, 143.80 level. As you can see, there is quite a bit of resistance here now, whether it's 143.70 or 143.80. That's really not to argue with. As you can see, these are all wicks. So anything in the general vicinity down to the 145.80 level, and then coming down to the bars closing highs at the 143.50 area, that's really where we're going to find more and more support for the euro. We do expect further consolidation ahead of the non-farm payrolls numbers. As you can see, quite a nice bar here in favor of the dollar. We'll see what happens with tomorrow's economic data, and we'll see if this is going to continue rolling down below the 144 level to the 143.80. Next up, we have the pound dollar. Pound has been consolidating, specifically against the dollar and the euro. As you can see, we haven't had as much volatility on the pound as we had on the euro, and that's really to say because we saw, now this is the euro again, we saw a lot of momentum coming down, but if you look at the pound, this has been rather a one-way street, going all the way down, and now it's finally consolidating. Profit taking is taking place against both the dollar and the euro, so that's why we're not seeing as much volatility. Currently trading at 159.50. Our first area of resistance is going to be the 160 area. Now make that clear, we should, if we see a close above 160, perhaps a break higher above this recent high at the 160-150 level, then we could see further pound gains. We don't expect that. We expect consolidation perhaps up to the 160-150 level, but ultimately we expect the dollar to continue strengthening. So first area of resistance is the 160 level, followed by 160.60. Above that, we'll have 160-150 and 162. Above 162, the major area of resistance is going to be this 163.50 level. If we see a close above the 163.50 level, I think we'll start to see further pound gains. First area of support for the pound could be found at 157.97, followed by 155.08 and 153.30. We'll see what happens with the economic data tomorrow and see which way it's going to take us. So stay tuned for Monday's update. Next up, we have the Swissy. Now, we drew this trend line up. We've had a fairly consistent increase here in dollar strength against the Swissy. We expect it to continue, perhaps a bit of a retracement down to the 103.20 level before another round of dollar buying. We don't think that's going to happen with tomorrow's NFP data about to be released. Once that data is released, we should see not only volatility, but hopefully continuation in direction. Let me cover the support and resistance levels. Currently trading at 104.11. First area of support could be found at 103.80, followed by 103.20, 102.40, 102, and 101.30. First area of resistance could be found now above this high, which was set yesterday at 104.50, followed by 105.50, 106.50, and 107. Finally, let's take a look at the dollar yen, currently trading at 89.61. Our first area of support could be found at 89.50. We've seen that over the last 2 days. Below 89.50 will be 88.20, which is this low, followed by 87.12. Below 87.12, we would like to dip down to the 85 level, but before we start talking about those support levels for the dollar, we'd really like to see a break of this low, so we won't get into the 85 level just yet. First area of resistance can be found at 90.20, followed by 90.80. Above 90.80, we'll have 91.60, 92, and 92.50. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 2nd, 2009. Until tomorrow, everyone, good luck trading.